Let's be careful in the red flags with, and a lot of us do this, writing off things of personal lifestyle as business. And when you are developing your financials, some of these things will be it will cause you possibly to get red flagged in with the IRS, getting audited, and then it'll cause some red flags and messing up everything that you've worked on because you would have that little negative against you. Like for instance, if you ever get audited, do you actually think that getting it's going to be easy getting grant money and getting loans? It won't be easy if you do that. It definitely won't be easy. And so you have to be very mindful of how you approach that. And so some of these online gurus or whatever tell you that yeah, you can write off that. It looks clever, right? But it's it's just reckless in your business management. It really looks reckless. And so you don't want to do that. You definitely don't. Now, the meals and the travel situation, deductions, and no business purpose noted. You have to make sure that it is a very, very needed part of that business, that business meeting, whether it's going to be if you have a staff and if you haven't, let's say, for instance, if you have an event or you could plan on having an event in your business, it's going to definitely be a tax write-off for you, but you have to know exactly what you're doing. And when you are writing up in your financials, in when you're receiving a grant or when you're doing this in your business plan, you got to keep those things in mind. What will help and what won't. And they know pretty much will be, what will be something that you can write off. And this is going to allow you and help you get those financial books together for the opportunity. I told you when you are working on applying for a grant or receiving a grant, when you do this in the back end, when you know all of this from the back end, you'll be able to give true financials, a true financial statement on the front end, and then you'll be more realistic on what funding you can ask for or what funding that you feel like you can receive, and then you'll be in compliance with the IRS and all of that, and that's going to benefit you in the long run. See, we're talking about the long haul of this. We're not talking about, hey, we're just going to make a quick few dollars and we're going to just do something in our business just to show where we got a little cash flow coming in. You don't want to operate that way. You want to operate as a long-term person, growing your business to something maybe very, very large, big one day. Don't think small. Just don't think of yourself as small business. And I'm going to stop using that word myself when I am speaking with those that are starting out. No, your business is just a business. But I understand that the definition of small business for the sake of funding sometimes and for the sake of the legalities of, what the government classifies as small business and what they'll do, like the SBA, they're designed to deal with a certain business that's making under a certain amount. And I do understand that portion. So now let's get off. Now, vehicle write-offs. This is a red flag too. Vehicles write-off with no business support. And a lot of times I see this now. You don't have your mileage. You're not keeping up good, accurate mileage.